Mr. Chairman, the Republic and the President have signaled their support for an economic plan to get everybody back to work that are losing their jobs and stimulate our economy. But I don't really think the President nor the public saw what this is pieced together was going to be like and the impact that it's going to have. And it's as if after we passed this Democrat Bush bailout plan that some people call the TARP, we found out that didn't work. You know, the stock market yesterday hit a new low on our current decline. Bailouts have not appeared to be working in the past. It's shored up by the current market. And I think that the problem that we had with TARP and the Democrat Bush bailout plan, as some refer to it as, is that we didn't get down to the fundamental cause of what was causing the problem. We didn't look at mark-to-marketing rules and make a significant change there. We didn't try to change the bank-to-bank problems as far as the exchange of credit. And we didn't look at the fundamental way that we sell mortgages. Now we have in this plan something that follows a similar pattern. Under the Democrat Bush bailout plan, we saw that we were giving money to irresponsible businesses to allow them to continue their irresponsible practices. They were paying executive bonuses. They were buying other businesses. They were failing to make the reforms necessary to change the course of their business, and so we can expect more of the same. Under this bill, we're going to give money to irresponsible governments for a bailout without reforms, and we're going to expect a different result. We're not going to get to the root cause of why local governments are not meeting their budgets. Instead, we're just going to throw money at them. And I think Americans are sort of fed up with the bailout mentality that we have here in Washington. Now, the term billions means a lot to some people in America, but here it doesn't seem to mean a whole lot. We commonly exchange the word billion for million and get a little bit confused. But to make this more clear, the $825 billion in this bill is a significant amount of money. And if it were a mortgage, we've been talking about bailout of companies and the mortgages that are causing a crisis. If this were a 30-year mortgage, we would owe monthly payments of $5.2 billion. And the gentleman from Florida talked about, well, if we'd only brought this up 8 years ago. Well, we can't change 8 years ago, but we can change today. We can prevent from borrowing so much money and paying $5 billion in a monthly payment if it were a mortgage. But it's not a mortgage. It's still money we don't have, but it's not a mortgage. It's more like a credit card bill. If this were a credit card bill and we were paying 1.5% interest daily, that would be $12.4 billion we would have to pay monthly on interest alone. Instead of $5 billion, it would be $12.4 billion. So, you know, we can't say where we were 8 years ago, but we can say where are we today. And today we don't need to exchange our future obligations to expect a stimulus right now. Instead, we could do some things differently. So what I've offered in this amendment is to take the newly authorized programs, some 17 programs, didn't exist before, so it's not like we're keeping some part of the government from continuing. It's just stopping the current expansion until we've had time for the authorization committees to fully vet these new programs. So I've listed 17 programs here. It reduces the amount of this part of the bill by $122.3 billion, approximately. It would be my hope that Mr. Rangel takes up a similar size in tax stimulation to get money directly to consumers, because studies have shown and history has proven that when consumers get a little extra money in their pocket, they do virtually always one of three things. They save the money, which is good because that gives more money available for mortgages. Or they invest the money, the second thing. They invest money that gives companies the opportunity to expand their businesses and hire more people. If they spend the money, that's a direct injection to our economy. It's a demand for goods. It's an expansion of our economy that creates jobs. So it would be my hope that we take these future obligations and future programs, take the money from here and put it into a direct injection into people's pockets through tax relief. Now, I could have offered that as part of this amendment, but out of respect to this committee, being an appropriating committee and not a tax authorization committee, I thought that would be best to leave to Mr. Rangel to bring up. But here's $122.3 billion that we can make available for an immediate injection into our economy in the form of tax relief. I would suggest, if Mr. Rangel is open to it, by allowing people who are working today to waive their Social Security, their FICA taxes, their federal income taxes for a period of months that would equal the same amount of money. If, for example, you did not have to pay your Social Security and your income taxes over the next month, you would have a 30% increase in your check. And that could be for several months. So I think it's very prudent for us to limit this, not borrow the money, instead give it directly to the taxpayers so that we can see a quick increase in our economy and more growth. So, Mr. Chairman, in conclusion, yesterday, Washington had a big party. They spent $140 million. The trash is still on the streets. When I came to work this morning, there was no rush hour traffic. People were still recovering from the big party we had yesterday. And yet we have Americans being laid off today. We should get money directly to the people, the consumers, so they can do one of three things to create a stronger economy. So I ask adoption of my amendment.